was a professional investor and I'm full-time and all I do is manage a portfolio of investments, then I may be able to do that. And when maybe. And sometimes in my 28-year career, I would outperform for maybe 5 years or 7 years. And that was a really good run. But most of the times, and for most investors, even professional investors, they mostly underperform the benchmark. It's very difficult to beat the benchmark. And there's many reasons for it. One is that you cannot time the market very well. You know why? It's because we are human beings. And what we're trying to do by saying that I'm going to time the market is I'm going to predict the future. So when it comes to anything else, we say, oh yeah, humans, of course, we cannot predict the future. We don't know what the future holds. But when it comes to investing, everybody is, they can forecast the future. They know what's going to happen in the future. It's impossible. How can we do that? We're human beings, right? So we have to be humble. Even a professional investor like me who's done 28 years investing, outperformed a lot, I am very, very humble because I know all the mistakes I've made, all the times I got things wrong. And if you're not a professional investor, chance of you outperform is less than 1%, 0.001%. You want to understand that stock picking is very difficult. Even for professional investors, it's very, very difficult to get it right all the time. So there's always going to be stocks you pick that makes you money. There's always going to be stocks that you pick that's going to lose you money. You just hope that as a whole you make money, but as I said, it's very difficult to do. And people don't look at the whole thing and say, hey, I picked this one stock which made me money, therefore stock picking wins. Or they invest and the stock crashes and say, oh, we should never stock pick. But that's not the way we should look at it. It should always be on probability. It always should be on the big picture of the portfolio, asset allocation, and understand exactly how those returns are driven or generated. And stock picking in general, for the individual who's not a professional investor, a trained professional, you should not be stock picking. Unless you know the company inside out, you work for the company, or you know the company so well, you're a user of that product and you believe in it and you buy that company and you hold it for the long term, then maybe that's okay. But for the general population, I think stock picking is a very, very difficult thing to do. Oh, that one's important. Malcolm just said high risk, high return.
Yeah.
So generally, you're right. So in order to generate high return, you take high risk. If you take low risk, you get low return. Yes, it's correlated. But when you stock pick and you don't diversify, you don't asset allocate, you don't do any of those things that many, many decades and 100 years of investing has taught us as human beings, we need to learn from our past. If you don't learn from that, you take high risk and low return or negative return. We were the first to have a digital experience. So you have a mobile app, you have your web app on your computer, and you can open an account, you can do CPF investment scheme account opening, start investing, and do all those things before we couldn't do it. So Endowus was the first to do the digital, the mobile app, and all that digital stuff. The second thing is, it used to be very expensive, or S&P 500 was not available. So what Endowus did was to bring S&P 500 into CPF so it's available. So because we were the only ones that wanted to do it, we were the only ones that we could invest through. Now, why was Endowus so desperate to get S&P 500 and passive index funds, global indexes into CPF? Because we think it's the best way to do it. So passive investing is around the world one of the best ways to invest long-term and grow your wealth, but there were none available. So we worked with our partners, Lion Global, Vanguard, and now recently Amundi, and upcoming BlackRock is bringing their products as well. And we're going to bring Amundi funds, the lowest cost funds ever in existence in Singapore, into CPF. So that's how we solve the problem of having these things. But the last thing I want to say is that there's a lot of cost embedded. When a fund is distributed in Singapore, you buy through DBS or iFAST Fund Supermart, it's very, very costly. So we wanted to make it a digital experience. So like Amazon, like Premium Mall, online means that it's a better experience and it's lower cost. So it's all about lowering cost for everybody, because when you invest, cost is your biggest enemy. If you can reduce cost for the same fund, then obviously you're going to have better returns. So that's what Endowus is all about. Better experience but lower cost for individuals. We're always fighting for the individual to have better solutions.
This question keep coming out quite a few times.
No, it's an important question, but there's two things. If you do long-term study, lump sum is always better. Like Mr. Loo dumps money in, goes up a long time, it compounds, so better. But
You must be.
it's very difficult as an individual to put all your money like all in, a bet. So it's psychologically difficult, and behaviorally we stress. So we try to make it easier by dollar cost averaging or monthly savings plans. Or if you have a lump sum you want to invest, then split it out into maybe 3, blocks or 4 blocks. Invest over weeks or months if you want, or quarters if you're really worried. But break it out to something that's okay for you. It's all up to you, because investing is a very personal experience. No one is like you. No one is your age, with your experience, with your money, the amount, and people have different goals in life. There is a fundamental difference. So there are a few things that are different. One is that the way we built the company is very different. So the culture, the way the company is structured, even the fundraising, our investors. You look at our cap table. The cap table means the ownership of the company. So we have the founders, all of the employees actually own a piece of the company. So we have probably the broadest ownership among any financial institution, among employees. The second thing is our backers, our strategic and financial investors. It's in the deck. You can see who they are. The biggest investors, EDBI. We're the only robo or digital player supported by Economic Development Board and Global Investment Arm, EDBI. The Singapore government is an investor in Endowus. The other investor is UBS, the biggest private bank in the world. Their first investment in a fintech company, first investment in a wealth company in Asia Pacific is Endowus. And they vetted us and due diligence, studied us for over a year to invest that money. But the other big names are Singtel, homegrown champion. Mr. Loo used to work there, home ground. But other guys like Samsung, big brand, Lightspeed and SoftBank Ventures, two of the biggest global venture investors, and Z Holdings, which is the Line messaging app. So we have a lot of great investors, and Prosus Naspers, which is the largest shareholder of Tencent, is a shareholder of Endowus. So very diversified, but really, really, really big names who are very, very deep pockets, who will support us to grow into the company we want to be, versus all the other robos who have maybe one venture company, one venture capital, some other guys, but very small. The other thing is that if anything happens to us, your money is safe. So we've always built this in a way that is safe. We're the only ones that have CPF. So we've been approved by the government to manage CPF money. So very different.